Last month, we saw skyrocketing demand bringing prices up and inventory down. This month, we're seeing a rebound. Inventory's coming back, but will the demand keep up? That's the real question. Hi everyone, thanks for joining us today. It's April 5th, 2021. Bay Area real estate is changing fast. We are at an inflection point right now. In last month's market update, we saw a massive demand drain inventory and push prices up with bidding wars. Every spring, as we humans come out of our winter hibernation, we see a significant uptick in inventory. This year, it seems to be starting now, and in today's discussion, we'll take a close look at how this is affecting single-family homes and condos and townhomes in our local markets, San Jose, Sunnyvale, Santa Clara, and Campbell. Yesterday, someone asked me if it was a buyer's market or a seller's market. This is how I answer that question. Right now, technically, we are seeing a seller's market, where there is limited inventory and multiple buyers competing for homes that generally sell in 14 days or less. The big balancing factor and advantage to the buyers in that equation is interest rates. With where they are now at historic lows, but steadily creeping up as the economy recovers, that enables buyers to have increased buying power, all in the magnitude of about $100,000 to $150,000 per percentage point. If at this point in time next year, we have increased rates by a full percentage point, every buyer in the market will have their buying capacity reduced. What does this mean for you as the consumer? If you're thinking about making a move, maybe it's time to upgrade to a single-family home from a townhome. You need that extra office for work from home or distance learning. Maybe for your next move, you can customize the inherent features of your home. What do I mean by that? Well, maybe the kids are grown up now and you don't need a home with great school districts. And in that same move, you can also get 10 minutes closer to work, plus a great backyard with a cabana that could be used as a workout room. Wouldn't that be a nice upgrade? You know, I know sometimes it can be hard to sell a home that you love, but in the long run, I urge you, take advantage of this unique market we have right now. Give us a call, free consultation, and see if you can get a better home more suited to your needs right now. If you're thinking about buying, whether it's your first home or you're thinking about upgrading or downsizing, take advantage of these historically low interest rates. I don't think they're ever going to be this low for a long time, and with the trend that we're seeing of the economy recovering, rates are going to go up to keep pace with that growth. I know we've been seeing a lot of competition lately, but we also have a lot of proven techniques and strategies to ensure our buyers win the bidding wars without overpaying and maximizing their value. Let's get started with a deep dive into our local markets. All right, first up we have San Jose. When I checked San Jose last week and the week before, we actually had positive absorption, meaning more houses were being listed and inventory was increasing, but that appears to be no longer the case. You'll see in some of the other cities where inventory is increasing, but here, demand is keeping pace. This week, the median list price for San Jose was right around $1.299 million, $779 per square foot, and 7 days on market. Our inventory is hovering around 261. That's a stark contrast from our inventory in January when we are closer to about 200. For most of the graphs today, you're going to see the annual real estate cycle starting up. In most areas, we'll observe a positive trend for median list and home price for the past 2 years. Looking at this inventory chart for San Jose, we can see that right now, as of April 2021, we're at a very similar state in the real estate cycle as we saw in 18, 19, and 20, where coming out of spring, people are going to start to list their homes, especially with the vaccine rollout and the pandemic hopefully starting to wind down. We're going to start to see more people come onto the market, buyers and sellers. Looking at the individual market segments, like I mentioned at the beginning of this section, I checked these numbers last week and the week before, and we actually saw increasing inventory, but sure enough, the demand is back at it. And right now, this week, as of now, we're seeing a massive increased demand in these bottom two quartiles. So this is going to be the 0 to 948, and then around 1.198 million. That there were 32 homes listed, 40 were taken off the market, 22 listed, 29 taken off the market. That's a big shift in inventory. All right, shifting our attention over to San Jose Townhomes. They're showing a lot of strength this month, actually. We're seeing a steady decline of days on market, which means that demand is increasing since what we saw in January. And it's not nearly as tight of a market in terms of inventory as we're seeing with single-family homes at 222 versus it's just about the same number that we had in January. Looking at this inventory chart, we can see that inventory right now is very low. It's mimicking what we saw in the past 2 years, but not quite as low as what we saw in 2018. That makes sense because across the board, we've been seeing that condominiums and townhomes have not quite been as hot of a market as single-family homes. Now, don't get me wrong, the condo market is still very hot. There is competition, but we're talking 5 offers, a little more realistic rather than 10 plus offers and hundreds of $1,000s over that we're seeing in single-family homes in some areas. Taking a look at the market quartiles for condominiums in San Jose, we see a trend that's pretty consistent where supply and demand are fairly balanced. We actually see some in the highest quartile. 2 more homes were introduced to the market, whereas 20 were taken off. 22 added, 24 absorbed. In the second quartile, around 799,000, and then about equal new versus absorbed for the bottom 2 quartiles in the market. All right, now taking a look at single-family homes in Sunnyvale, the median list price was $1.92 million, with a market action index of 91 and inventory holding steady around 27. The nice thing is that actually if you look at the quartiles, we are seeing steadily increasing inventory, which is good. That means a little bit less competition. And if we look at the median list price, we see a positive trend since about April 2019. We're at an average about a little under $1.7 million. And now we're looking at an average list price of about $1.85 million, about an 8.8% increase. Not bad considering coronavirus happened right in between. All right, moving over to Sunnyvale Townhomes, we've got a median list price of $1.08 million, 21 days on market, and an inventory of 29. That's been pretty steady for the past few months. Looking at the median list price, this is kind of consistent with what we've seen in condos. They haven't put on a lot of value in the past few years, and in fact, in Sunnyvale, we saw that they were at about 1.2 million in April of 2019, and they're a little below that, right around 1.1 million right now. One interesting effect that we'll see in the Sunnyvale condos and townhomes is that there seems to be increased demand in this top quartile around 1.6 million. And I weighed on this a little bit last month, but I think what's happening is that people are getting tired of the competition they're seeing in single family homes. They're starting to move over to townhomes. With work from home, people are needing some bigger homes, and that's why we're seeing some of that additional demand in this highest quartile with a 4-bedroom, 4-bathroom condominium / townhome. In all the other 3 quartiles though, we do see negative absorption, so that's a good sign for competition, but that's probably gonna end up driving prices down and following a slightly downward trend for the time being. Moving over to Santa Clara single-family homes, we have a median list price of $1.497 million, $983 per square foot, 7 days on market, very low, and inventory actually is increasing. We're seeing 46 homes on the market versus about 15. That's 3 times as much as what we saw in January. Wow. Taking a look at median list price, this is Santa Clara single family homes. We saw prices right around 1.4, 1.5 million in the April timeframe. They went down last year, but actually we've been putting on some significant gains, so we're right back at that $1.5 million median price point. Taking a look at the market segments, it's very interesting because in this market, we see that there's a lot of new inventory coming on the market. So in some of the other markets, the single family homes, the demand paced with the inventory. However, in Santa Clara, we're seeing that inventory is outpacing demand. What this will probably do is this will have a downward trending effect on the price. However, since things are changing so quickly, we'll have to check back on this next month to see where it's going. Taking a look at Santa Clara townhomes and condominiums, we have a list price of $738,000. $753 per square foot, 21 days on market. That's a lot lower than what we saw in January, about 60, and inventory at around 40, which is pretty close to what we saw earlier this year. Looking at the median list price, it is showing a slight downward trend, but one thing I would like to highlight is if we look at the price per square foot, we are seeing that number also hold pretty steady. So one thing that's nice to see is that we have a little pop right now from the competition that's going on, and hopefully we'll see the balance between supply and demand change and give opportunities to different groups of people. So looking at price per square foot, it's good to see that this is holding fairly steady, and we also see this pop for the competition that's going on. That's healthy, that's good. I would say this is a market where we might see that the increasing inventory has a stronger effect on the pricing and the competition. Also, if we look at this other figure, the price decrease versus price increase, what we're seeing is that there's a lot of properties that are doing price decreases. What probably happened is that they listed the property at a certain level, trying to take advantage of the momentum and the hotness of the market. However, now that that heat is starting to cool off and we're starting to see inventory come back, now they're decreasing their prices and getting back to reality. And then also in the market quartiles, like I mentioned before, we're seeing a lot of new inventory coming on the market. We've got about 10 homes coming on the market and only 4 of them getting purchased and taken off the market. All right, on to our final market. This is Campbell, California, single-family homes. We have a median list price of $1.898 million, $918 per square foot, an average of 7 days on market, very low. Inventory of 20, which is about right for the past few months. Let's take a look at this. It's interesting to see this annual trend in median list price and to see this magnified effect this year. I think what caused this was that there were very few expensive homes that were listed and lingered on the market for a month or two, which set those high watermarks. Let's take a look at this other graph, average days on market by quartile. And one thing that's nice to look at is that over the course of this coronavirus pandemic, we've seen the market quartiles in Campbell really just go all over the place. But taking a closer look at the past few months, it's nice to see things get back to what we could call normal, where we've got the top most expensive quartile having a higher days on market, around 77, which is good for that luxury high-end market. And then for the other 3 quartiles, 1.98 million and below, those are trending towards 20, 30, and 40 days on market respectively. Looking at the inventory by quartile, this reflects what we're seeing in some of the other areas where we do have new inventory coming on the market, with about 10 new homes coming on the market and only 4 getting taken off the market. Taking a look over at condos and townhomes in Campbell, we have a median list price of $804,000, $752 per square foot, and an average of about 28 days on market. That's been consistent for the past few months. We have about 20 homes on the market, which is almost twice what we saw in January. Campbell is a smaller market. Let's take a look at median list price. Median list price has been seeing a slight decreasing trend since 2019, and price per square foot also has a decreasing trend, but we are seeing an increase from where we were last year. That's good. In terms of the market quartiles, there was slightly negative absorption, where 5 homes were sold and 4 new ones came on the market. The Campbell market, this is different than the other markets. For the most part, Santa Clara, Sunnyvale, and San Jose, the condos and townhome market is a little bit softer. However, in Campbell, because of the demand, because of the city, and because of less inventory and availability, there's only 20 homes on the market, it seems to still have some strength, especially evidenced by the fact that we have about 4 homes that were new to the market and 5 that were taken off the market. All right, everybody, thanks for staying tuned until the end. These are crazy times that we are living in now, and regardless of the news, life keeps going on, kids need to go to school, and taxes need to be paid. Make sure to have a great realtor by your side to ensure you are making the right decisions with one of the most important and biggest financial investments you will ever make, your home. If you're thinking about making a move, take a look at the downloadable guides we have in the description below. We have some great resources for both buyers and sellers: a home buying process flowchart, home selling process flowchart, down payment guide, 7 tips for a fast home sale, etc. Great stuff. You know, right now, this market is at an inflection point. Supply and demand are fighting for superiority, and it just so happens my hair is also at an inflection point. I haven't had a real haircut since the pandemic started, and just like the real estate markets we just saw, this next month is going to show the new direction of the market. Supply will either outpace demand and bring some price relaxation, or demand will continue to be strong, driving more competition and prices higher. Just like my hair, it's either gonna stay or it's gonna go. Find out next month. See you guys later.